Welcome back to Hoisting Income. If you're new to this channel, this is all about how to make and grow your income using income investing strategies and exchange traded funds. And today we're talking about GLCC exchange traded fund. This is also known as the Global X Producer Equity Covered Call ETF. So we're going to look at how this fund is structured in terms of its investing strategy and also how it's able to provide you consistent yield and how you can benefit from that, and also the pros and cons of the fund and suitability. So stay tuned till then to know more about it. Before we go ahead, a quick disclaimer: this is only for knowledge sharing purposes and not financial advice. Having said that, let's quickly understand what this fund is all about. This is a this is from the Global X funds, and the name is Global X Gold Producer Equity Covered Call ETF (GLCC). And strategy is basically two pronged. One is like exposure to the diversified North American listed gold producers, basically, which means that they invest in the North American gold producing companies. And secondly, it's generating monthly income via covered call trading strategy. So basically, investing in these gold producers and writing covered calls on those stocks. That's what the strategy is about. It's a very simple, straightforward one. But there is a slight, uh, dynamism with this strategy. I'll explain that as we move ahead, which gives the fund a little bit of an edge. And here are the basic facts about the fund. Ticker is GLCC. Price is about $30.69. This fund is pretty old. It has been there since April 2011. It has a good history, like about 14 years now. Net assets 29 to 286 million, and expense ratio is 0.78. It's not too high, not too low. It's kind of reasonable. It's from the Global X Investments. It's a reputed fund house. So basic information looks pretty good. And when you look at the holdings, like this is the main area that you need to look at. The key holdings are the Global X Producers Index ETF. They hold this index, basically the components of this index, plus also this index ETF as part of the portfolio. And they also hold other gold mining producers or gold producing companies. Like some of the companies, Goldfields, Kinross, Agnico Eagle Mines, Anglo Gold, Shanti, and then Barrick Gold. Some of these names are pretty familiar. These are some of the largest blue chip companies in the gold mining sector with large balance sheets, strong financial strength, good cash flows, and so on. So these are not small mining companies or small mining outfits. These are basically pretty large blue chip companies which also have good cash flows, and they're paying dividends, and they are listed in some of the key stock exchanges. So that's something to keep in mind, that you are investing in the blue chip companies. And geographically, they are actually spread across different countries, like 73% Canada, around 16.6% South Africa, around 6% in the US, and then a little bit in UK and other nations. So geographically too, it's kind of diversified and widely spread. So that gives you a kind of a diversified exposure to gold mining stocks. Okay, what are the investment strategies, or what are the ways in which they write the calls? So here what they do is basically they write calls on the stocks that they hold. However, there was a minor change in the strategy in, I would say, a major change in the strategy in June 2022. Of course, they are still writing calls. The overall strategy didn't change. So what is the change basically? Let's look at it. Effective June 2022, GLC made a slight change in its covered call writing strategy. The change allows the fund to employ a dynamic call writing strategy or a flexible level. So earlier, the fund used to write covered calls on the entire portfolio, but now they can adjust the level of call writing. They don't have to write on the entire portfolio. They can write calls on part of the portfolio. Probably they can write calls on a small part of the portfolio, or the entire portfolio, or a large part of the portfolio, or make it a little moderate. They can do all kinds of changes in the level of call writing, and they can also have more calls on specific stocks, less on certain stocks, and so on. So that flexibility or adjustment allows for more capital appreciation when premiums are pretty low, or for example, the stocks are doing well. You can write less calls. I mean, the fund can write lesser amount of calls and allow for more capital appreciation. And when the premiums are pretty good, when the volatility is good, premiums are very good, rich, fund can write more calls to efficiently capture more kind of premiums to allow for higher income generation, which results in more income for the fund, and later on, those incomes will be distributed to the unit holders. So the portfolio metrics are also published on the website. We are not going into detail here. They just show basically the percentage of calls returned by month end, like 33% of calls returned by month end, and how much of calls are out of the money and so on. This is pretty interesting that the fund is very transparent. They are providing all this information. So someone who is interested in tracking the performance of the fund on every month or every, you know, select period, you can go to the fund website and get this information. Okay, now let's look at the performance, total returns. We'll also look at the price returns and the dividend returns as well and break it down. But this is like a historical data, what you're seeing here. It's from the tickertech.com or the dividend website. This is actually the return since the day they started incepted, April 2011 to around end of February 2025. So if you look at the return, like its average annual return, it's 12.6% per year, like which is commendable. Like this is a tremendous amount of return, like over this long period. Like so, that's a good history. So that is something which is commendable. This is a decent fund to look at. Like if it has that kind of history, you can see if you look at this chart, you can see a little bit of highs and lows in somewhere in this period. Like I don't know which year it is. Like it has seen, you know, levels go up to 50,000. Like if you invested 10,000 at the inception, you would have seen the value going up to 50,000 here, and then it went down, and then it recovered and comes back to 51,992. It's a pretty volatile. That's something that you can notice here. Okay, let's look at the recent performance to get a better idea. The price over the last 1 year, but I'm also covering 2 years or 3 years as well. Current price is 39, 30.69. If you look at the price 1 year ago, it's close to $20. So it's basically a 54% increase in the price. So this is not something which is normal. This is an exceptional year, like because of the recent bullish move in gold prices. All the gold stocks, gold producing companies, they had a very good run up in the market. So that's why you have seen this, 50% plus returns in the last 1 year. Now, if you look at the last 2 years, still you have like 35% returns, which is pretty good. And if you look at the 3 year returns, like it's 2%. It's pretty low. So we'll always see these ups and downs and fluctuations in prices, and that's usually the normal thing that you see with gold prices. Sometimes it's too flat, sometimes it's just flat and going down, sometimes it gradually moves up, sometimes it keeps moving up, and sometimes flat and up. You never know. It's really difficult to predict. So having that covered call option helps you to get some regular income to stay invested rather than worrying about the volatility. And covered call ETFs also benefit from volatility. Okay, just to put thing in context, like I've just taken the 1 year chart and a 5 year chart here. The last 1 year, you have seen a big run up in prices. You can see that here. Like see 2024, 2025, last 1 year it has gone up tremendously. The reason I'm looking at 5 years is just to show you that gold has seen GLCC, this fund has seen a lot of peaks and troughs. Like if you look at the peaks, like it's basically around 26, 27, 28, 30, and so on. Like around 26 to 30 levels, it's peaked. But if you look at the low prices, marked in red, you can see it's somewhere near 21, 22, like 23, around these levels. And physical gold prices have gone about 2,900, and maybe this by the end of this year it may touch $3,000 or even surpass $3,000. And given the recent trends, the price of GLCC has gone. There's no surprising factor that has led to this. This is just the increase in the gold prices. And of course, there are also other factors which are fueling this trend. Some of the factors include global economic slowdown or even the fear or uncertainty in the markets. And there is also things like interest rate cut in some countries, including US, Canada, and so on. And there is also recent tariff threats from the United States and other nations. So international trade is also going to get affected. So all these are actually fueling the fueling the demand for gold because people are looking for safe haven. The interesting thing is you're not just going to invest in gold and wait for the price to go up. You are also getting regular income from the fund due to the call writing. Okay, so that's where dividend yield comes in. So dividend yield is coming from the income that is generated from writing calls. And some income also could come in the form of kind of dividends from the stocks if the fund holds stocks and they don't write covered calls on certain portion of the stocks, and that portion of the stocks are generating some dividend yield plus some capital appreciation. So that's can be significant. Like sometimes it's a low number, but that also adds some income to the fund. Now let's look at the dividends over the last 12 months. The fund has made about $2.65. Like for a $30.69 price, like the dividend yield works out to 8.6%. And this is not a very big dividend yield compared to other high yield funds and high income funds. This is pretty okay, decent, 8 to 9%. But the good thing is having this kind of yield, you have stability in the funding. You don't see too much of NAV erosion, and there's also a potential for capital appreciation. And see, this fund can also be sluggish when gold stocks are flat or sluggish. So that is all the risk in the underlying asset. So when you're investing in covered call ETF, remember that you are investing in the underlying stocks, underlying asset. So that doesn't go away. But since you are having this covered call strategy, it smoothens your experience or smoothens your returns or volatility. It doesn't remove all your risk, but it smoothens your volatility over time. Okay, this is what we see based on our performance. Price return of 54% over the last 1 year, dividend yield of 8.6%, total return of 62.6%. This is like a great multi-bagger, The last 1 year you have seen this. This is not going to happen every year, definitely for sure. It's not going to happen in the next 1 year. So this is all recent performance, recent spike in the price of gold. So just take it with a large grain of salt. And the returns can be something like 15%, 16% in a year, like in an okay kind of year, or it could be low, high. We never know. It's difficult to predict the gold prices, and it's difficult to predict the price return as such. But dividend yield could be somewhere in the 8 to 10% range. Most more or less in that range. It all depends. If it's more volatile, probably it can even go about 10%. But it's a good option for income investors who want to look at stable yield, but also stability in the price of the asset. Okay, there are a few misconceptions I want to clear here. Like when you look at any new fund or a concept, people always come up with a criticism. And this is not a new fund; it has been there for 14 years. And but there are a few misconceptions that has to be cleared. Uh, okay, number one, this is not a gold ETF, nor does it track physical gold. So this fund is actually tracking the gold producers index and the gold producer stocks. So this is something you need to keep in mind. Like you are actually investing in the gold producers index and the gold producer stocks, and the performance of these stocks influences the performance of the fund. Of course, there is a kind of element of gold price performance, or the dynamics in the gold market also affect this, but you're not investing directly in the physical gold. So that's something to keep in mind. And so the performance is linked to gold. Okay, performance is not exactly linked to gold. It is true to some extent, but it is more linked to the gold producer stock performance. So it's the second point is similar to the above. And in the first point, I'm also want to emphasize that it is not a gold ETF. So that's something to keep in mind. If you want to look at gold ETF, you have other options. You have iShares Gold Fund or Gold Shares Fund. You can look at that. Third point, some of the critics they say that gold doesn't produce income; it's a scam. Okay, if it is a scam, obviously the Securities and Exchange Commission is not going to allow a fund to operate for 14 years and 15 years. Okay, so it's not a scam. Let's make that clear. These funds are regulated, and income comes from covered call writing, and some small income comes from gold mining stocks. And it's not a kind of scam, or it's not a kind of some kind of manipulation or your money given back to you. It's basically the income is coming from dividends. Sorry, dividends are coming from income generated by the fund. How did the fund generate income? By writing covered calls. That's the simple answer to that. And the fourth misconception is I'm only investing in gold producers, not silver or other metals. This is not fully true. While it's true that the main underlying focus of the companies are in gold, they also have exposure to silver, copper, um, and other base metals, iron, and so on and so forth. So you are also having some exposure to base metals as well. So you're not just relying on just the gold or the gold prices. You are also getting a small portion of the income from other mining activities. I mean, that is a positive in my view because it gives you more diversity. Okay, and last point, when precious metal stocks rally, I give up all the upside. This is not true because in this fund doesn't write the entire portfolio. Um, I mean, write the entire portfolio in the form of calls. The fund doesn't use the 100% of the portfolio to write calls. They use a lesser portion or more depending on the market conditions and the call premiums and other factors. So the upside is only capped to the extent of the calls return. Let's say 30% of the fund is used for call writing. So only that 30% is affected, and the upside is capped for those funds, those portion of the funds, like basically that 30%. The entire portfolio is not going to be capped for the upside because only a part of the portfolio is used for the call writing. So that is something you need to understand. They follow a dynamic call writing strategy. That's what I discussed in the previous one, where I mentioned like June 2022 is when they introduced this dynamic strategy, which completely changed the performance of the fund, and it's performing pretty well. Okay, now we have seen most of the information about the fund. Just to quickly summarize all the pros and cons, I'm just putting it here. Uh, some of them we have already discussed. That. Okay, what are the pros? First, ability to generate income from gold mining stock exposure. Perfect. It's pretty obvious. And exposure to alternate asset classes. This is very important, such as gold producers. And these can actually, provide a different type of return or slightly delinked from the regular market returns. And thirdly, benefit from volatility in gold prices or gold stocks. Obviously, volatility is a best friend of covered call strategies. So obviously, this fund benefits from that. And lastly, the better liquidity than physical gold. Obviously, being a gold fund, you can always buy, sell, and it's more liquid. And price discovery is also better. So the pros part is pretty obvious, pretty clear. Now let's look at the cons. Higher MER of 0.78%, while gold ETFs have lower MER. Obviously, because gold ETFs are basically passive instruments. You're not doing any active management, whereas covered calls require active management. So that's why the fee is higher. So there is a higher fee. So if you are looking for gold ETFs, go for gold ETFs. Don't go for this fund. And this fund has a higher fee because of the active management and covered call writing strategy. So that's why the fee is higher. And second is misconceptions can lead to incorrect expectations. Yeah, that would cover most of the cons. So that's why I discussed all of them in the misconceptions section. And when gold prices rally, GLCC returns are capped due to covered calls. Okay. Okay. But the answer that I would give, I would just argue that the dynamic covered call rating strategy actually mitigates this risk. I would not say this risk is completely written off. No, the dynamic covered call rating strategy it reduces this risk dramatically. So even when the prices go up, rally, like the fund manager can say, I'm not going to write too many calls this month. I'll let the fund appreciate in terms of value, so capture more upside. So that's something which can be mitigated, and the fund is already doing that. Lastly, high volatility in gold prices and cyclicality in the mining sector can be a concern. So Obviously, the mining sector is always cyclical. Also, the commodities prices can be cyclical. And in a way, this what called trading strategy provides certain income on a regular basis and provides you the ability to hold on to the asset for a longer period of time, despite the volatile situation, despite the cyclicality, despite a lot of other factors, geopolitical situation, war-like situation, and so many things can happen, economic slowdown as well. So all that can happen, but still you are able to hold on to the fund because you are getting those regular dividends, and the covered call writing helps you reduce the volatility. So that makes life easier for the investor. And this fund can definitely be a part of the portfolio. So as we come to the end of the video, I would like to say that this fund is not recommended as a main part of the portfolio. You can invest up to 5 to 10% of your total portfolio value into this fund, GLCC. There are other alternate funds, not recommendations, because I've not researched these funds. So the first one is GLDX, GoldX Producers Index ETF. It was launched in November 2024, pretty recent one. So it's a new fund. You have to do your own research on this. I have not really done any study on this. And hedge, which is a GoldX Gold ETF. I looked at the details of this ETF. This basically works like a fund which holds gold ETFs and it writes what called on the gold ETFs. Um, I find the strategy pretty interesting, pretty good. It has a slightly lower yield compared to the GLCC, but the good news here is like you are investing directly in the gold. So people who want income but also want something like a gold ETF. So this combines gold ETF as well as income from the gold ETF into one package. So HGY is a good option for someone looking for gold ETF plus the income option. The last one is XGT from iShares. This actually mirrors the performance of the Toronto Stock Exchange in gold index. It's basically like an index ETF. So the first two are good options for index ETF investors, and the middle one, the HGY, is a good option for people looking for income from gold ETF. So these are other alternatives, not recommendations. You can do your own research. And GLCC is a good option for investors if they can go up to 5% of their portfolio or maximum 10%, not more than that. And it's good in terms of the dividend yield and capital appreciation. It can vary depending on the gold prices or the market conditions. So with that, I would say GLCC is a good option to consider. It's a small portion of your portfolio for income and moderate capital appreciation. And with that, we are coming to the end of this video. If you like what you're seeing, please subscribe to this channel and also drop any questions or comments you have. Thanks and have a great day.